Hello, Jim here. Selling options is a great way to make some extra income, and I believe the safest and one of the easiest ways to do that is with the option wheel strategy. Today, I want to talk about my balanced monthly wheel strategy. I'm making pretty close to 1,200 on a monthly basis with only about 25,000. I'm going to share with you how that strategy works. I'm also going to talk about some of my other strategies that I'll share in future videos. And at the end of the video, so be sure you stay until the end, I'm going to actually go over my recent trades and what I think is going to be going on in the future related to these same trades. So stay tuned. I think it's going to be well worth your while. Okay, let's go ahead and jump right in. I like to mention in pretty much all my videos that I always start with picking good companies at good prices. I look at fundamentals, I look at ROE, ROA. I also look at debt to equity. I will look at growth. I will look at dividends. If they have dividends and are paying dividends, are they paying out a fairly low payout ratio? Are they growing those dividends? So I'd like to look at that kind of criteria. Then I also will look at technicals. I'll look at the Bollinger Band. I'll look at, where they stand compared to the 50-day average, the 100-day average, because it's critical. If you pick the right companies, you've pretty much almost won the battle, if you get my drift. You pick the wrong companies, you could potentially, no matter what kind of trade you put on, could end up in trouble. So I just wanted to mention that, and it's really important to kind of understand that, again, because there's a lot of companies that are out there that are really pricey, and a lot of new ETFs that are very, very risky too. They may be leveraged, they may be based on Bitcoin or crypto. So I stay safe. I pick companies that I want to own. I don't work with companies that don't make money. So just wanted to share that to start with. Now, you may ask, well, why do I like the wheel strategy? It's just a fairly safe and easy strategy, especially if you want to already own the companies and you already know they're a good price for them, where you want to own them, meaning what particular strike price you want to own them at. It takes away a lot of the risk. If you had purchased the stock at the same time at its going price, you wouldn't have done as well, compared to selling something like a cash secured put where you're potentially 10% below the current stock price. So that's why I particularly like the wheel. And then once you own the stock, you can sell covered calls and potentially do really well with the covered calls. Now, I do like to mention to people, you also have to be careful with the covered calls. Probably some of my biggest mistakes recently is selling covered calls too low. I always sell covered calls above the cost basis, but there's times when the stock shoots up and then you end up with covered calls that are deep in the money. So that's something else I try to avoid. So you might also ask, why am I setting up these three different strategies? So I originally only did one strategy. Then I've had different members and subscribers ask, well, can I do this with a $10,000 account? Can I do this with a $25,000 account or a $50,000, $100,000 account? So I'm trying to cater to different people depending on how much money you have, because I believe personally selling options, you can do so much better, especially in these small accounts. One example is in a small account, say a $10,000 account, you may only be earning 3 or 4% on a yearly basis. With one trade, one time, you could potentially make that same amount of money. And again, we'll show that at the end of the video when we go over the trades. So I set up these three strategies that I'm currently using, and I'm actually trading them. I've got them in different accounts, and I have dedicated money. They're not all, it's not the entire account. Some people, might have the whole account as 10,000, but it's a bigger account where I'm dedicating 10,000, especially for my 10,000 strategy, wheel strategy. So there's other cash in there, but I'm sticking to that 10,000. I'm using the full amount of cash, meaning I'm not leveraging it. I'm not doing margin. If everything got assigned in each of these strategies, I have enough cash to cover it. I'm not taking a whole lot of risk. but still you can do really well compared to just basic investing or, earning really slow, or not slow, but minor interest in the account. So the 10,000 conservative wheel trade strategy is a new one. I won't be talking about it or sharing trades with it. It's one I will share probably within a couple of days or a week. I'm going to have another video on it. But the one I'm going to talk about today is what I call my 25,000 balanced wheel trade portfolio. In it, I'm only doing monthlies. I'm doing cash secured puts, and primarily on companies I really like that, again, are good, healthy companies that are not overpriced, that may be slightly overpriced, but when you look at the strike that I pick, that strike typically is not necessarily overpriced. And I'm running it more on monthly positions because there's a lot of stocks that may have weeklies, but there's also a lot of really good companies and even ETFs that only have monthlies. They do not have weeklies. Now, my third strategy, which I'm calling my 50,000 advanced spread wheel trade strategy, kind of a lot of words there, is another one that I'm not going to dig into today, but it's a little bit riskier. You do have protection, meaning you're purchasing puts or purchasing calls to protect you. So I'll go into it in a different video, but today it's primarily this balance wheel cash secured put trades, and I've been averaging, like you noticed on the thumbnail, around 1,200 on a monthly basis. And if you look at it on a yearly basis, it's like over 50%. So if you use the rule of 72, every year or two, you could potentially, be able to double that account, especially if you're putting the cash right back into it, meaning it's a retirement account and you're just trying to double that account. So it can have a massive impact on retirement. Now, if you need it to live off of, 25,000, portfolio, earning that kind of money is doable. Like I'm going to show again, I'm going to share with you the trades at the very end. And it's not a huge amount of risk. A lot of other YouTubers are kind of playing a real risk game. They're using margin, they're using lots of contracts, and you could potentially blow up your account. In this case, what I'm sharing here, it's probably one of the least risky, and that's just how I trade. I'm very risk averse. I don't like to take a lot of chances. So just wanted to share that. In the next part of this video, we'll go into detail about the trades and a little bit more detail about the strategy, this 25K balanced wheel trade strategy. So stay tuned and we'll jump into the next part. Okay, now I've opened up my option wheel strategy spreadsheet. So I'm keeping everything in one spreadsheet. I make this available to my memberships. I also, when I make these trades, I post them right away with details about, the delta and specifics. And they get that literally within 15 minutes after I make the trade. On occasion, I may post it a little bit later if I end up having meetings or other things that kind of delay me. But these are the different trades. Today, I'm just going to be talking about the monthly wheel trades, which is this tab in the spreadsheet. Then I also have the 10K wheel trades, spread wheel trades, and then I also have a section for favorites. And these will be favorites more related to the wheel strategy. But for this one, I have mentioned this in previous videos. For the first month, I used Chewy, Square, Twillo, and Pins. Pins was the only one assigned. Everything else I either expired or I closed really cheap. I started with one contract each. Kept it really simple, so I didn't even need the 25,000 in equity at the time. And then the next month, because Twillo and Square went up so much, and even Chewy went up quite a bit, I used different accounts, or not accounts, companies. I continued to use pins. I sold a covered call. Here you can see I made $58 for a covered call in only one contract. Then I did contracts on HIMS. Another company I like. They're an online network where you can meet with specific types of doctors, and I think you can also do pharmaceuticals. But it's a trade I did back in November. So I typically do about 5 trades. They're all cash secured puts. This was HIMS at $20, expiring in 11/28. May 208. Then I did one on Bluebird. Bluebird is one of the companies I really like trading on these days. It's only monthly, it doesn't have weeklies, but very well run company, very profitable. It's they just do a really good job. They have one of the highest return on equities I've seen. I believe it's over 120. But they also expired back in November. I made $368. They have surprisingly high premium. And again, a really good inexpensive company. At the time I did 35 was the strike price. Then I did FCX. This is a mineral company. And I did it at 42. I believe this is one of the only ones that's currently in the money. I believe they dropped to around 39, but they have not been assigned to me. I made 170. And then I also did Fiverr. It expired. Only one contract with Fiverr and made about $100. And all of these had pretty good returns, anywhere from 28 to 61%, 62%. And with cash secured puts, you don't get the huge high returns because again, it's a cash secured put. There's, you need the full amount of cash to actually be trading it. And then in December, I did HIMS again. I rolled. I did FCX again. Did all these with 117.25 expirations. Bluebird, again, great company, good premium. Brought in over 600 in premium. I did go with a little bit of a higher strike, mainly because the calls looked even better. So I'm like, well, if I get a sign, the calls will bring in even more cash. And this is Occidental Petroleum. So it's a new one I added that I started doing back in December. Did it at 47, which this is the one Warren Buffett trades in. And I'm doing it at a price lower than what Warren Buffett paid for the shares. And currently I don't own any of the shares. I'm looking to roll it. It's the only one that's expiring next week that I haven't rolled yet. But I brought in 204 back in December. So did well with that. Now here we are in January, and already in the first week I've done quite a bit of trades, set up pretty much the whole month already. So pins, I did another covered call. This time I brought in 102. HIMS, I rolled it again. I rolled it out to February 21st. Now some of these, one negative, which I'm not sure it's really a negative. Some of these will cross earnings, but since I don't think any of them are overpriced. I think at 25, HIMS is not necessarily overpriced at 25. Plus, I think my cost basis may be pretty close to 20. And just like Bluebird, it also has really good premium. Not as good as Bluebird's premium. But 261 is pretty good premium. And I did that just this last week. I did it last Friday. And in Bluebird, I did this week. I believe, on Monday. I believe the 7th was Monday. Today's the 9th. So actually it was Tuesday, I believe. And I did 2 contracts, 40, but both HIMS and Bluebird. I took a little bit more risk because they're fairly inexpensive. And I brought in 417, so not as high as the 619. And I did go out to 221. So the returns were a little bit lower here. I might have gotten a little bit impatient. I could have probably waited, but again, these were all expiring next Friday, so I didn't have a whole lot of time. Also, a lot of them went up. I believe Bluebird got up to as high as 44, and it dropped back recently. I believe it's right at 40, or slightly over 40. And then I did FCX, and I rolled it yesterday, 1825. Kept it at the same strike and just pretty much rolled it in the money and brought in another 160. So I believe my cost basis is right around 40, and I think the stock is currently at 39. And then the one I have not done yet is I haven't rolled Occidental Petroleum, which I'm going to have to roll this week or let it expire, but it currently will either expire, and I may let it expire and I may do something else, but I did this kind of to show you what it would look like. I grabbed some numbers on how much I could make if I rolled it yesterday, how much I would have made. So I would have made 288 rolling Occidental Petroleum out to the next month, which would have been a little bit better than the original. And then you could see the strike price is a little bit lower. So if I come down here and I look, and this is a combination of all, well, we got October, November, December, and now January. So it's 4 months. And that's how much I brought in. And this is the interest for the 4 months on the 25,000 or 29,000 in cash because I brought in extra income the first 3 months. So it's more like 29. I did start with 25. And then total income is 47.74 between the interest and then all the premium from the cash secured puts, which averages just shy of 1,200. So I believe the last one it was right at 1,200. So I'm pretty confident that I can get pretty near that on a monthly basis. So pretty close to 1,200. Now, if you look at that on a yearly basis, that's almost 14,323.89. I mean, that's the exact number based on these 4 months. And then total capital at 29,751. And this is like a monthly ROI of 4%. So in 1 month, if you've just got the money sitting in a money market, you've done almost as good as your money market. And year over year or yearly ROI, 48%. Which is really good. And if you use the rule in 72, it almost shows you would double in every year and a half. Now, could you do that month in, month out? I've been fairly successful with it for these 4 months, but you never know. If we took a major hit to the market and the market had a black swan kind of an event, it could impact it and I could have a pretty bad month. So my guess is it probably is a little bit lower than this. This may be more like a 35 or 30%, but so far so good. It's been working out well. So the notes, what have I learned along the way? 4 to 5 monthly cash secured puts on good companies that are not overpriced, trying to find less expensive stocks. And again, all of these are anywhere from $25 to $50. For Occidental Petroleum, I believe they went up to 52 or 53 in the last week. Oil has done a little bit better. Again, these are real numbers. I could do one or more trades. So one thought too is if you're brand new to it and you're fearful and just getting started, you don't necessarily need to do all of these trades. You could potentially just do Bluebird and probably get anywhere from a 12 to 14% return because that'd be 16. That's, if you average 500 a month, you could be potentially bringing in probably 15 to 20%, so, or you could do fewer contracts. You could have stuck with the one contract for each of these. Again, not all would be assigned, so can do the 5 contracts. The only one so far that's been assigned over these 4 months is Pinterest, and I believe it's right around 30, and that's my cost basis. So it's about break even right now. They did get a bit of a bounce, but then they gave it back, I believe, the last day or two. And I did pick different companies due to some stocks becoming very pricey, and that's kind of how it works. You don't, Twillo got up over 100. I think Square also got into I believe it's in the low 80s. If Square gets back into the 70s, I may start trading it again. This shows things can change and you cannot necessarily rinse and repeat. It's more complicated than that. So can you make the same trade month in, month out? No, you'll end up having to change them based on, how companies are doing, did something happen or have they shot up and become really pricey, or the reverse, have they dropped because of some other reason? So it's really hard to do it with the same stocks month in, month out every month. And then most of the returns I got with the planner did not beat this return, and I only traded for 3 months. So even right now with earning, my return, unfortunately, with my planner, I talked about that in my last video. When I went and looked at the 5 years I had a planner, and it should have been good years. I only averaged like 5%. So, and I was paying him 1%. So I compared first to, could I do it better managing my own investments? And I found out yes. So I started doing that. Then I compared it with selling options, versus not selling options. And I definitely did better. And the same thing, I compared it with my 401k, and I was doing much better than my 401k. So that's why I'm pretty much trading options in most of my accounts now. And then if you can get this kind of return, you would double your account every 1.56 years. So, and I think that may be showing 1.50 years. I can't tell if that's an O or a 6. So, and that's what I wanted to share with you guys, what that looked like. I did want to come over here and share a little bit more on what these accounts look like. So the 10K, it's the new one I'm doing. I've just started. I did my first trades yesterday, and it's going to be around a 20 delta. The expiration cycle will be a little bit, it won't just be monthlies. It'll be some weeklies, some monthlies. Trading frequency, 1 to 3 trades per month. Again, keeping it simple and safe. I like a cash requirement, meaning you have enough cash. If everything was assigned, you could deal with that assignment without margin or getting a margin call or anything along those lines. And best for beginners or conservative traders. This is the one we did today. I typically would do around a 35 delta expiration cycle. I'm doing these more monthly, so you'll see I had expirations of all January 17th. Next time it's 2/21. Same cash requirement, 1 to 5 trades per month. And then best for traders comfortable with moderate risk, aiming to balance income and generation and portfolio diversification. And then the 50K advanced spread wheel trade strategy, which I've done previous videos on it. A little less risk than the monthly, but around a 30 delta. These I will do quite a bit of weeklies, but they did get in trouble with Micron and AMD, and I converted some to a cash secured put. So this is still kind of work in progress. Trading frequency looks a lot like the other account. 2 to 5 securities, usually executing 1 to 5 trades. And then target securities include more expensive stocks with higher implied volatility. Again, I used Micron, I used Four, I used AMD, and I also utilize vertical spreads, meaning you buy the put or you buy the call and use the spread to limit your risk. Because again, you're dealing with more expensive stocks. And just by the nature of being more expensive, they can move pretty radically. Now, I share all this again with my memberships. If you're curious about my memberships, you can see all that in the description. Members I have 3 different levels, and it's fairly inexpensive. It's month to month. There's no long-term obligation. And now when I share my trades, I also note, which option wheel strategy the particular trade is related to. I also talk about, if it's something that's my go-to trade, which is still my vertical put credit spread trade, I note that. I also share different videos, and I have a lot of people in the Discord. I have a lot of members who are sharing trades with each other. They may trade a little bit differently than I do. And a lot of people kind of learning, and it's a good environment for people to learn. So that's what I wanted to share with you guys. Let me know what you think. I like to get comments. I try to answer them within 24 to 48 hours. Let me know, are you doing anything like this? Are you doing an option wheel type strategy? Let me know. And if you do, what are your favorite stocks for doing it? So again, thanks for joining me, and I look forward to seeing you next time.